Hey, what's going on, everyone? Welcome back to another video. In today's video, I'm going to go through the market and take a look at some oil and gas covered call ETFs, do some comparisons on a few that I've lined up, see which one comes out on top. But first, guys, as always, nothing here is financial advice. I'm not a financial advisor. And if you go ahead, please hit that like button if you're enjoying these videos. I really, really appreciate that. So before we jump into some ETFs, I just want to take a quick look at the overall market. So today was kind of a crazy day. Started off a bit flat, but you can see the S&P 500 jumped up almost 3%, Nasdaq close to 4%. Some popular ETFs, you guys, USCL up 3.3, QQCL up over 4%. We have HYLD up almost 4%, HHIS up almost 5%. Bitcoin's kind of been flat still lately. And then some of the oil and gas stuff has come down a bit. You can see ENCC here in the red. But most everything was in the green, you guys, today. There's been a lot of different news. Every day the news is changing. So I figured I'd just do a quick overview to start with. But what I want to do here is take a look at a few different oil and gas ETFs to get that exposure to North American and Canadian oil and gas pipelines, producers, and all that stuff. So we're going to start with the Global X Canadian Oil and Gas Covered Call ETF. This is ENCC. Current yield is about 11.2%. This one has been around for quite a while. Very, very popular. You can see it's got a risk rating of high. It also has a leverage version, which is ENCL. So it's going to have a bit of a higher yield. It's going to have that 25% leverage in there. But you guys can see here, ENCC over 800 million in net assets. This is a very, very popular ETF. And right now, although a Global X can cover 50% with their option strategy, they're only covering about 38%, as you can see. And it's coming out to actually an indicative yield higher than what they're currently paying. So ENCC has really been benefiting from all of this volatility with the oil and gas sectors and everything that's been going on. The dividend has been pretty steady at 12 cents per month for the last little while. It was once upon a time 13 cents, but guys, it's been over a year now at that 12-cent dividend. So that is ENCC, and we see the holdings. They've got 36% in the NRGY ETF, so that's going to be like an oil and gas index. We've got Cenovus, Suncor, Whitecap, Imperial, ARC, Canadian Natural, Tourmaline, Pembina, South Bow. So you're going to notice probably most of these ETFs have basically a lot of overlap when it comes to all these companies. But the interesting thing here with ENCC and ENCL is you have those individual stocks, but you also have that 36% in the NRGY ETF. Now, this is the NRGY ETF here, you guys. No covered calls, just straight dividends from the oil and gas sector. You get, again, high risk rating here. However, we're going to take a look at the net assets of over 300 million, and it does have a benchmark that it's going after an index. It is the Equal Weight Canadian Oil and Gas Index is what they're kind of tracking here. So basically, you guys, this is 36% of ENCC and ENCL. And again, there is some overlap with those other names. However, this is no covered calls on this ETF, just straight dividends. So I thought that was interesting because we're going to take a look at some competitors. I think this is the only one that really has that broad index based on top of those single stocks. So we have Oily from Evolve. Oily from Evolve. So right now it's paying a dividend of about 13 cents per month. That's been very steady. We have net assets, though, only 31 million. So very small fund compared to ENCC. We have 10 holdings. And if we take a look, they are all here in Canada. So again, guys, all the familiar names, you guys can see them here with Enbridge, Pembina, TC, Suncor, all of these. So that is Oily from Evolve. Again, pretty small AUM compared to ENCC. However, we're going to take a look at a couple other competitors as well. We have the 9 Point Energy Income Fund. Okay, so this is NRGI from 9 Point. Now, I believe this 9 Point fund can sell options up to 50%. I don't know if they're always at 50%. As This one was a little bit more hard to find information on, you guys, but if you see here that they do have a yield, trailing yield of 7%. However, they recently changed a few things on this fund, and it does have a 14% target dividend distribution rate. So that would put it higher than ENCC with that. Now, as far as holdings and all that stuff, you guys, this is the NRGI one. They've got 55% in Canada, 17% in the US. They got 5% over in Cyprus. Again, pretty much a mix of all those same names that we are used to. They do have a cumulative return here of 40% on their website. So, again, guys, they're targeting that 14% distribution here on this fund, which I thought was pretty interesting. They made that pretty clear, 14%. I'd say that's a pretty strong amount for an oil and gas ETF, you guys. And as far as the leverage goes, I do not believe that this one is using any leverage. So I think that you've got ENCL if you're looking for leverage. However, this one, um, it does say here that they will use derivatives, which may introduce leverage into the fund. So it's not totally clear to me if they're using that leverage or if they're using those derivatives and bringing that leverage through. But either way, they are targeting that 14% monthly distribution, which is pretty cool. We've also got one here from BMO. This is the ZWEN covered call ETF. This one's going to be a bit more conservative, about a 7% yield. Again, risk rating of high. They got net assets of about 163 million. And this one's been around since January 2023. So, again, guys, this is a covered call strategy from BMO. It's going to have a smaller yield, probably a bit more conservative and everything like that. They've got a management fee of 0.65%, monthly dividends. And we'll take a quick look over at their holdings. And they do have 40 holdings here. So they've got a bit of a larger portfolio. And with their top 10, you guys are going to see a lot of the same ones that we have been looking at. These are basically their top 10. You see Exxon in there. Some different names actually in here. We got Suncor, Conoco. So, I think you're going to have a little bit of a bigger, broad mix in here, probably some US, American, and potentially some global companies as well. So that is the BMO one. Now, how do these all stack up? Well, I use this dividend calculator back tester basically on the Oldfish website. So shout out to Oldfish. If you haven't checked him out, he is another YouTuber on here, focuses on high yields and dividends and all that good stuff. So I've been using his calculator all the time because it's so easy to use. Like I find it easier than pretty much any other calculator. But anyways, I've plugged them all in here and you guys can see the top performing here is the NRGY. That is the Global X one that has no covered calls. So you're getting that 42% total return. Now, I just went from the last year, you guys. So obviously, in the last few months, a lot has been going on, but we're just taking a look, comparing them on the last 1 year time frame. NRGY at 42. We've got ENCC at 32%. ENCL is at 40%, which is really good. Oilie's coming in at 38.9%. The NRGI from 9 point at about 35%. And then the BMO one down at 30.7%. So I thought that was pretty interesting. Line them all up, do that total return. Of course, that NRGY without the covered calls on it has been doing the best because they're not selling off any of the upside, and there has been a lot of upside recently. So with that, you are getting that smaller yield though. And ENCL, they've got that 25% leverage in there. They've kept up their rate within that about 2% range, rate by NRGY, which I thought was pretty awesome. And here's the chart. So anyways, you guys, that was it. I figured I would put these different energy covered call ETFs up to the test, up against the NRGY ETF kind of as the benchmark. So I hope you guys enjoyed this video. Leave a comment down below if you're still buying into the oil or if you think it's going back down, because I think this week we're going to see a lot of news start to come out as things start to change. Anyways, you guys, I hope everyone's having a great night out there, and I'll catch you guys over in the next video.